What's going on, people? Back with a bang. This is the Money Management, here to bring you guys another market update. So as you guys know, this is a 4-day trading week, and you know what, interestingly, the past couple of days the markets have been down. So stocks decline as data show a still hot economy, markets wrap. Basically, last week we ran up. You saw the market pushing up. We saw the Nasdaq running up 1,000 points from Tuesday to Friday. We saw different indexes jumping 3-4% within a few days. The triple leveraged ETFs, TQQQ, was up, what, 7-8% each day, Wednesday, Thursday, Friday. And obviously now we've had a little bit of a pullback. So one thing I did want to highlight in this video was today was something that they call quantitative tightening. So basically that began today, and it's in short, basically the Federal Reserve tries to shrink its losses. That's the best way I can put it. So basically, it's a way that the Federal Reserve tries to reduce liquidity in the economy. And I think the number on the balance sheet was around 3 or 4 trillion just a couple of years ago, right when the pandemic began. And now it's around 9 trillion, so it's doubled. So when it comes to stimulus checks and pumping money into the economy, printing money, all that kind of stuff, basically, in a way, the market is now paying for it. I don't know if that makes a lot of sense to you guys, but long story short, that began today, and that is one of the reasons that the market did drop so heavily at the beginning of the day. Like I said, it's called quantitative tightening. So if you want to go and Google that, you can have a look at that and then understand what the Fed is doing with the money, how it relates to different treasury securities, etc., etc. And yeah, so right now I'm just going to jump into the charts, go on trading view, and show you guys a few things we've traded this week. To be honest, I did actually forget that today was June 1st and that the quantitative tightening would begin today. So if I had known that, I would not have swung one of the plays that I did. But like I said, we'll review them now. We'll also look at some plays I'm watching, some sectors I'm still watching for the last couple of days of this week and also going into next week. But just to begin with, I would like to say, if you did trade different things and you've lost a bit of money this week or last week because you stuck to your plan, don't worry, it's all part of it. So to begin with, let's have a look at Walmart, because this was the trade that I decided to swing when in theory I didn't have to, but it was one of the setups that I chose going into this week, and I decided to stick with my plan. So for Walmart, basically last week we traded this, as you guys know, $126 calls. I tried to trade it again this week with the $132 calls expiring next week. So two things I want to highlight here is I sold, right? I could have decided to continue holding through the pain because it expires next week and I have enough time on it. And secondly, I actually sold because sometimes it's just best to cut your losses and make money elsewhere, which is actually what I did. But just so you guys can see, it pushed up yesterday above the moving averages on the 50-minute chart. As it pulled back towards the moving average here, I entered the call options, honestly expecting it to continue uptrending steadily as it has done the past few days. And my price target of 132 was in sight. But as you can see, it opened pretty poorly, dropped below the moving averages and started downtrending, so I cut my losses. It was up yesterday, and I felt pretty good about it towards the end of the day. But like I said, sometimes you just got to take profits and move on. Now, it's sitting in and around the moving averages on the 50-minute chart. If you look at the hourly chart with this, you can see that it's below all the moving averages, which was not the case yesterday. I was confident yesterday and posted the chart in the group because I thought the uptrend would continue, but now it's below the moving averages, but it did bounce in this support zone, which was a good sign. And I am looking to re-enter this position and this play this week, so I'll go for a lower strike price, maybe $127, $128 call. Please note there's a resistance zone around $128.50. As always, you could just check different time frames just so you can get a better idea of what's happening. So yeah, my price target is still $132, but I'm just going to be patient with this one, and this time probably take profits a little bit quicker. See how I kind of got fooled here, closed above the moving average after climbing up on the daily, and then today obviously it's just dropped 2.5%. But the good thing is we bounced back today with PTON. So PTON puts were clearly on the cards today. This is a company I have very little faith in, and you can probably see why. If you look at the chart from the past 6-7 months, this stock has been getting trashed. $97 all the way now to $12.94. And if you go back even further to this time last year, June, July last year, it was $128. Think about Walmart that I just showed you. Walmart right now is $128. If you come back to Walmart in a year and it's $12, think about how crazy that would be. That's exactly the situation PTON is. Now, I'm not comparing the companies, of course. Walmart is a global superpower. It's no way to be compared to PTON, but I'm just talking about stock price. Imagine a stock that's $128 in a year is $12.94. That's what we're looking at here. So PTON puts are something that I do like swinging. I've done it a few times in the past couple months, and I'm doing it again today. 4-hour chart, clearly bearish, below all the moving averages. Check the 1-hour chart. Same story. Below all the moving averages, falling below this 1-hour resistance. I feel like it's going to drop into this 4-hour support zone around $12. But the play I took was a $13 put, which expires this Friday. I'm very confident in this one. It's already up about 40%. Obviously, contracts are now in the money as well. Look at that. Pushed up, gave a great entry on 50-minute chart for puts. Got heavily rejected at the 21 moving average and fell very beautifully for those of us who are in puts. I called it out in the group. If you are in the group and you're in the premium section, you would have seen this. Also remember, if you are in the Road Trading Academy but not in the premium section, the premium section is where you'll find all the callouts, explanations, charts, breakdowns, etc. But for PTON, I'm pretty positive. It was down 7% today. It looks like it's still bearish. There's not a lot of hope for this company. So I want to move on to the gas and oil sector now, because this is what I said I was bullish on this week. And surprise, surprise, they have done the magic once again. So here's Oxy, right? Reason I'm starting with Oxy is because today in the current option trades tab, towards the end of the day, Devon called out some calls for Oxy, which he's swinging. And I do like this as well. Now, sitting at a price point where I think it's slightly under a resistance level, but it's going to hold here and eventually start pushing up before the end of this week. Now, it is important to highlight, looking at the 4-hour chart here on Oxy, yesterday, first day of this week's trading, it pushed up to a resistance level, right? Resistance zone right here, $73.98, $74, and dropped down. But it held around $68 and started pushing up again. So why am I looking at Oxy? Well, because with oil, gas right now, the price is still being high and the stock price is continually uptrending, right? This is one of those safer plays when it comes to call options. As you can see, the zones are not lying to you. Breaks out the zone, pushes up quite high. Breaks below the zone, drops to the next zone. Holds at the next zone. Again, this is a big resistance zone, but once we push out of this $71 price point, I'll look at getting calls all the way up to $74 again. Yesterday, I traded ExxonMobil right at the market open. Within the first 30 minutes, called it out. I know a lot of people took their profits on it, 30%, 55%, whatever it was. ExxonMobil, I have my price target just under $100, $99.78, and I expect to hit that again this week. Right now, slightly down after hours, but it's a very small pullback. It's sitting in a resistance zone, which I believe it will break out of and push up towards the $100 mark again. So keep this on your radar for the rest of the week. Now, let's just quickly look at tech. I'm going to go with the semiconductor AMD. And for this, it's paying attention to my levels of support and resistance right now. I have a level of support around 99.76. See how yesterday the price dropped to was a moving average pushed up. It did not fall to my level of support. Today it fell slightly below my level of support before pushing up again. I think this 99.76 level is a strong level of support, and honestly, my price target is still $106 for this week. We managed to get up to $104.35 yesterday, but sold off. And with AMD, right, it's got plenty of potential when it does finally start moving. It can move $5, $6, $7 in a day. It can move 6, 7, 8% in a day very easily. So I'm not worried about this right now. With a bit of volume and maybe an end of the week push, we will see it at $106. I fully believe that. Then I have my second price target of $110, but it looks like we're not going to see that until next week. So that's mainly it for the stocks I've been trading and I'm looking at going into the rest of the week. I did want to point out Chewy because Sure enough, I just saw it in the Discord. He posted that he got into Chewy calls, and clearly that was a great decision because it's up 22% after hours. Now, I'm not quite sure what made him get into calls, but that is the positive point of being in a Discord with other people, because you can see plays like this when they happen, before they happen, or whatever. Check this out. Crazy push. I'm not sure what happened with Chewy, but that could be an interesting one to play over the next coming days. Obviously, the RSI is extremely high right now. It's way overbought, so it's probably going to pull back a little bit. But that will be interesting to see how that pans out. So that's it for today's video, guys. As always, make sure you leave a thumbs up, you comment, and subscribe to the channel. Please do share these videos with your friends. We're starting to get these videos up and out again, getting them moving like we had them last year. And also make sure you guys check out the Royal Trading Academy. You guys know the deal with that. Plenty of different channels there for you guys to learn and obviously benefit from. Also, if you have not checked out the stock option starter pack already, please do check that one out. And make sure you guys are back here next time for another video. There are plenty of different links in the description. You guys can go check those out for yourselves. But I got one to making, you got one to making. See you guys next time for another video. Peace.
Game over.